Now we're going to have a look and speak to Michael about Tax Assure. So for everybody who's on the call, I've actually been working with Tax Assure for maybe 6.5 years, where I've had brokers refer him clients, and he's helped me get deals over the line. So welcome, Michael. Hopefully it's a lot sunnier over there than it is here. So firstly, Michael, could you tell us a little bit about Tax Assure? And what do you guys do there, I guess, is the main question I really want to know.
Firstly, thanks for having me today, and thanks to everybody for attending and giving up your precious time for this. So look, yes, in terms of us, what we do, and obviously we're getting very busy at the moment, and I'll obviously talk a lot more about that in a little while in terms of what's happening with the ATO. But essentially, all we do as a business is help businesses that owe money to the ATO. Can be businesses or PAYG. Taxpayers, anybody really, and that's essentially all that we do. Specifically around that is so day in, day out. Myself and our team of advisors, and we've got offices in Sydney, Melbourne, and Brisbane, and we do a lot of work in Perth. We're over there quite a bit. COVID's made it a little bit tricky for us over the last little while, but certainly WA is not sort of immune to what's been happening with COVID and with floods and fires and the ATO and everything that's going on with that. But specifically what we do and how we would work with people like brokers and other sort of financial advisors is our typical scenario would be that somebody approaches them, they want to borrow some money, and there's a problem because there's an ATO debt there, and the ATO maybe is banging the drum fairly hard, and there's a concern about getting the deal done. The first thing we do is we settle the ATO down, engage with them, halt any recovery action if there is any, but more importantly, reducing the risk that the recovery action will actually occur, which can then, we've seen it time and time again where it actually kills the deal. So we get in and basically get some time to get an exit strategy for the business. There's really only a couple of ways that can happen. They either can fund the tax debt out of cash flow, or they need to get some external funding in, whereas a lot of the people on this sort of today will be, I guess, most interested in. So we will go in, as I said, stop the action, either negotiate either a short-term plan or a long-term planning, depending what's needed. Sometimes we just need to go in and put in something short-term to allow the transaction to occur. The other thing that we can do, and this is something that often can make quite a difference, there was I guess a lot of misconceptions going around, particularly during COVID, that the ATO were doing deals on primary tax debt and were reducing that. That's not the case. It's never been the case. And outside of some sort of insolvency event, I don't anticipate it will be the case. But what we can do is that we can go in, and often this turns what is not a deal into a deal where we can go in and remove some of the interest and penalties. And particularly if you've got a customer who's maybe had tax debt for many years on and off, and they've paid it off, and then they keep going back and forth. We can go back many, many years. We did one just in the last week where we actually went back 20 years, removed a whole bunch of interest. A lot of it had already been paid. And it was more than 50. In fact, it was 2/3 of the debt. It was $200,000 on $300,000. So you may have a deal there where you can't do a lend, but we could maybe go in and renovate the customer, for want of a better phrase, and get it so it does become a deal. The other thing we do quite a lot of is a lot of people put themselves into payment plans with the ATO, and they're just not good plans. They're killing cash flow. They're killing their ability to borrow. So we'll go in and renegotiate those and put something in place that better suits the business. Bill, if you,
just a question, Michael. So when you're looking at obviously these timeframes around putting it on halt and reducing, how does that work? So you've obviously got brokers that can contact you, and is there a time frame that's required in that process?
Yeah, look, there's probably two time frames that are quite important. One is people often say, when do we come and see you? The answer is as soon as possible. The sooner we get access to the client and access to the ATO on their behalf, the more that we can do. In terms of actually the transaction itself, we can be in, most of our clients, we're in and out within a month, but we've had matters where, we can actually get in and settle it. We can do it within 24, 48 hours. So we work within the parameters of what we need and what's needed by the transaction. If it is linked into a transaction, a lot of it, we're a referral business. The vast majority of our business comes from accountants, brokers, financiers. So we're very familiar with working within the constraints of what is needed for that transaction and for that particular customer. The one thing we don't want to do is slow the process down, because often these things are quite time critical. So yeah, so that's does that sort of answer your question, Bill?
Yeah, that's great. Just a question for myself. How long have you been with or had Tax Assure going now, Michael?
Yeah, well, in its current form, I think we're in year 9, but in previous forms, we've been going for a little bit longer than that. Another sort of, I think 7 or 8 years on top of that. So, you know, we've been doing this for a long time. The good thing is that, you know, we're very specific in what we do. We've got deep contacts within the ATO. Our guys are dealing with the ATO every day. Sometimes on a Monday morning, I come in and think some of our advisors are talking to their mates on the phone because they're talking about what they did on the weekend. And I'm thinking, come on, guys, get into work. And then I hear, anyway, we better talk about this client. And it's somebody from the ATO they're dealing with. But the other thing too is because of it's all that we do. We don't do tax advice work. We don't do compliance work. We don't do anything that sits in the realm of an accountant. We don't lend money. That's you guys. Everything. So we're very specific about what we do. We've got quite deep, as I mentioned before, connections. One of the things that the ATO have done for us, because they recognise that we're getting money paid back to the ATO that might not otherwise get paid back, is they've given us escalation points. So that means that if we're dealing with somebody and we can't get and sometimes that happens, you'll have a case officer who's run out of patience, just absolutely run out of patience with a particular taxpayer because they've been messing them around, and so they're not prepared to play ball, and they're working within. We may need to escalate that to a team leader or an assistant director or somebody like that to say, hey, I think this is a deal. This is something that needs to be done. There is an exit strategy here, and then the ATO generally work with us. Yeah. So in terms of how we work, you know, I think that first line is probably quite important on the slide you've got. Is that we're an extension of, you know, it's not our client, it's your client. It's we come in, we do our piece, we fix them, do whatever's needed, and then we leave. And we're a bit of a weird business. We don't like repeat customers. So most of, you know, the vast majority of our clients we don't see again because we've fixed them and then they get on with business. In terms of, you know, how we work, I think I've probably covered that off. But, you know, the things to remember is we can get you time to finish the transaction. We can help put the client or the customer in a better position with the ATO, which is often really important with lenders. I mean, we work a lot with Bluestone because they get it and they understand tax debt and they are comfortable with it, but a lot of lenders aren't. Some lenders will need the debt to be managed. Some will want it paid out on settlement. There's a whole range of things, but so we can certainly put it in that, I guess, better position. And most importantly, I guess, is we can often, as I said, that shift in getting some of the interest and penalties can be the difference between the deal working and not working. And also, even if there is going to be a loan, then that, you know, if we can knock 20% of the debt off, then the customer still borrows the full amount, but they've got a bit of extra working capital.
So another question here for you. So one of the brokers would like to know, why can't a person go directly and negotiate a payment plan? Doesn't the ATO have people that can help individuals out? So I guess that's a great question, but it's also the question is, what's the benefit of obviously using someone like yourself at Tax Assure?
Yeah, 100%. Look, the answer to that question is, of course, they can. And the ATO have case officers that are, you know, well skilled and able to do that. Because you've got to remember, most of our clients are, you know, have some level of impairment because they've got ATO debt, which makes it difficult for them. And I guess the example I would say is that, you know, most businesses can go and get funding directly as well. They can go to the funder directly, or they can go to the bank directly, but they go via a broker because a broker knows how to position it, how to structure the arrangement, or and get the deal across the line. And we're a little bit the same around that, in that the ATO they've got about 350 case officers nationally. There's varying degrees of experience there, but generally they're all pretty good. But they're very much governed by what every taxpayer has a risk rating, and there's a whole range of factors around compliance and all sorts of things that go in there. Very often the case officer is very much dictated, and the computer will pop up and say, this client has this compliance history, has this risk rating, we need 30% up front and the balance over 6 or maybe 12 months. If you go to them and you don't know that you can push back and you can structure it differently, that's what you get. We never would agree to that sort of arrangement. So that's kind of where the difference is. But, you know, sometimes people do have a crack, or their accountant, they'll do it through their accountant, and then, you know, they're not getting where they need to be, so they come and see us.
That was going to be my next question. A lot of customers obviously will go through accountants, but it sounds like you obviously have been dealing with for a long time, so the negotiating skills probably a little bit more solid, or the relationship might be a reason that brokers online today might want to reach out to Michael if you do have these cases. Hopefully that answers your question as well, Richard. So,
yeah, and Bel, just on that, about 30% of our work comes through through accountants. So they recognise in the day-to-day stuff, some of it's fairly straightforward and they'll do those, but anything a little bit more complicated, they come and see us.
Now, the next big question out there, and Carla touched base a little bit in our presentation as well, the relation to, current debt collection activities in ATO debt. So is that something you're seeing more at the moment, or how's your, what's your view on that at the moment?
Yeah, look, the landscape has changed dramatically certainly in the last sort of few months, and it's changing dramatically every day we're seeing. And we have a team that are talking to the ATO. We only deal with the debt area, we don't deal with the other areas, but the debt areas, there are different sort of, I guess, operation to the rest of the ATO. And we probably about once a week we'll have an email that'll go around our system saying, look, this has changed within the ATO, this has changed with the ATO. So look, the situation is this. We all know what happened when COVID hit in sort of the beginning of 2020. If you wanted to pay money to the ATO, they were saying, well, look, don't bother, just put everything on hold. That was including existing debt, put new BAS payments and everything on hold, and they were doing that. And the reason they did that was to help businesses, because there was a concern that the whole world was going to sort of cave in, and nobody knew. The government was throwing money hand over fist at people. So, and that's not just COVID. We had fires, we had floods, we had a whole range of things going on. It's been a crazy time. What that did, though, is it meant that the debt that was payable, which normally sat around the sort of the $20 billion mark, this is uncontested debt, is now over 50 billion. Slowly, the ATO started doing sort of what they call soft collection and so on. They now are back in full recovery mode because there's been a real need. And there's been pressure from government, as the commissioner earlier this year was pulled before a Senate Estimates Committee to say, this debt's where it is. What is the ATO doing to collect that? There's also was a report that came out around superannuation saying that only 15% of unpaid super was actually getting collected by the ATO. So what that has meant is that the ATO have done a number of things. They've actually recruited heavily. There's a lot more case officers in there now because some of them went off and did other things during COVID, and now they've got to pay. But they are now at that point where there is strong pressure, and this will be reflected. And I'd be surprised, and I'd love some comments from the sort of the attendees around what they've heard or experienced directly or through the customers or accountants that you're dealing with, as to dealing with the ATO debt area at the moment. Because if I sort of think about it in terms of how aggressive is the wrong word, but how effectively the ATO were collecting debt, if that was pre-COVID, then they sort of came down here during COVID. Well, we're kind of here now. They're actually collecting more vigorously, I think, than they were pre-COVID, because they need to, because there's a need not only to collect the debt that is outstanding, but also to get businesses compliant again. A lot of businesses during COVID got used to not paying tax, and they also got used to a whole bunch of handouts. So there is a concern that businesses will be not viable and will end up in the hands of the liquidators. So the ATO are definitely in that, and you would have seen it. There's been there's been, initially it started with calls, then warning letters, and the whole thing. The one thing I would say to the audience here is that that's quite a big number. I mentioned before that there's only really two ways that can be repaid, either out of cash flow or if they get some external funding in. So if I was to go out and become a broker tomorrow, I'd just be targeting this stuff, because there's so much work out there, and it's, if you're comfortable with it and understand it, and deal with the guys, Carla and Bel, they get it, they understand it, and really encourage you to, not only just, a lot of people sort of think, oh, I don't really want to ask whether you got your ATO. I'd actually be asking it and chasing it and going through your contacts and saying, has anybody got any ATO debt they need help with? And then come and see the guys. And then we could certainly help in terms of getting the deal through, helping with all the things I've already talked about. But it's really an area that we can't ignore and needs to be addressed. And funding is going to be one of the big areas, I think, that will certainly help with this.
I think it's a really good point though, Michael, is if you're not comfortable with these type of applications, reach out. We can always go through scenarios, look at particular cases. But I guess one of the reasons, a broker might be steering away from tax debt is they think it's a bad deal type of situation. Often we have credit impaired customers that come to Bluestone who have gone through a life event to be in that position. What would be some of the reasons, if you can give, I guess, a general overcome of why they would end up in a position of having tax debt?
Yeah, look, really good question, Bill. And it's funny too, because every one of our clients has tax debt, and they can range from, we've got clients with $20,000 tax debt to, we got two in last week and both had in excess of $6 million in debt. But where we really do a lot of our work's in that sort of $200,000 to $500,000 mark. That's everything. But we don't have any clients that are rogues. We don't have any clients that are just, oh, I didn't pay my tax because I don't think I want to or I should and everything. Every one of them has had an event. And those events can be anything from things that have happened within the business. We've talked about the pandemic, but it's not just the pandemic, it's all the things that have happened around that. And it's interesting because the ATO are talking now about the new normal. And as far as the ATO are concerned, the pandemic's over. But we know that the real stuff's only just starting, because people have got supply chain issues. They've got customers they're dealing with that go broke and don't pay them. They can't get staff, they can't get resources. They've had personal things happen in their lives, the amount of stress that we are seeing. And that is something that is relevant when we're dealing with the ATO. So there's a whole range of things that can happen in the business or in people's private lives that are meaning that people, as you sort of described it, Bill, have had life events themselves. And all of that is relevant. And if positioned properly with the ATO or positioned properly with a lender, both will support the business moving forward, because most of our clients have very viable businesses, but for these events that have occurred that have actually created a legacy debt for them that they just need help getting on top of.
Yeah, I think that's really good. You've got to think about the solution lending. And me and Carla have been speaking to so many brokers lately around, looking at paying out your tax debt with other, unsecured debt really will help, reduce those monthly expenses. Expenses are going up on a family. It will be quite difficult for a family of five with a large tax bill to make regular monthly repayments plus paying their credit cards and their personal loans. I think if we can start to look at these examples of, a debt consolidation, including your tax debt, it's certainly going to give that customer, freer cash flow in their everyday expenses, as well as their business.
And it's a huge opportunity because with rate rises also going up, and they're not going to stop for a little bit. Clients 4 months ago what may have already been on struggle street, and now with these rate rises, you get an average loan size of $700,000. Whether it's in WA or the Eastern Seaboard, that's an increase of about $720 a week. You've got cost of living's gone up. You've got petrol that's gone up. A lot of these people didn't or were struggling to have any surplus cash flow already then. Now, increasing your total repayments by, even $1,000 as well as food in a month, that's going to cause them a lot of pain. So it's a great opportunity to start looking at debt consolidation now, because what you don't want is in 2 months' time with further rate rises that they're actually already struggling and are in arrears. That's when they come to you for help. That's when they're going to get higher loan repayments, because they're going to be in a more, like a specialist product rather than a prime or near prime. So, I always say talk the repayment, not the rate. It's a solution for the client. So if you can say to them, let's put your tax debt and everything else together and your new repayment's going to be $3,100 a month. The perception is in their head, they're thinking, oh my God, I'm paying $5,000 and struggling. They're saving themselves $1,900 a week. Where if you said that rate is 4.9%, they'll go, well, I'm on 3.99. I'm not paying that extra 50 points. But if they actually looked at it the exact same way in the cost saving, they're actually way better off. And again, the path to prime is, put them in there for a solution and we move them and step them down to a cheaper rate, in time to come.
Perfect. Bill, could I ask you if you could just go back to the previous slide? There's probably 2 points I'd like to make, because I think this is something that a lot of you are going to see probably first, and it's what's going to bring somebody to you if there is an issue with the ATO. I mentioned before the ATO is back in, full-blown collection mode. One of the things that they've been doing, and some of you have probably seen this in the press because it's been all over the place, they're using a thing called a direct penalty notice as a means to get directors to engage in their businesses. Now, for that, most of you probably know what they are, but just very quickly for those that don't, a director penalty notice essentially makes a director personally liable for certain taxes of the business. People set up a business so that they can have the corporate balance sheet behind it. But the director penalty notice, and it's essentially superannuation, pay-as-you-go withholding, and GST more recently. What the ATO, I think, have recognised is that this is a really effective way, because they haven't been doing the winding ups over the last couple of years, and even now they haven't really started. You'll see a couple a week in the lists, and that's about it. But what they have started doing is using these director penalty notices, which are essentially pushing the responsibility back on the director to make an assessment of their business as to whether they think they're viable and can pay their debt. Because assuming they've kept their lodgements up to date, they have a 21-day period in which they can put the company administration or liquidation and everything, and most businesses don't want to do that. But it means that they've got, you know, a very short time frame to make that assessment. So you're probably going to be seeing some directors that are extremely stressed what's happening with them, and they're going to come to you and say, look, you know, we've got this thing, because, and to put some figures around it so you understand the scale of this, they sent out 52,000 warning letters in March, April this year to companies and to the directors saying, you've got this debt. If you don't pay this debt, we will issue you, and it's not a mate, we will issue you with a director penalty notice. Since that time, they've issued about 7,000 of them, and they're issuing somewhere between 120 and 150 a day. So, which is, you know, a fourfold increase in the last few months. So you're going to have directors who are going to be worried about this situation, and they're going to come to you and say, but if you go, yep, I know what a director penalty notice is, I understand how that works, we can work with you, we can get some funding, because, you know, there's always the option. One of the great options around a director penalty notice is you pay it out. There are options if you can't pay it out in full to get into an enforceable payment plan, which then stops the ATO pursuing the director personally. The other thing which you've probably seen is that the ATO now have a power to report to credit reporting agencies. And again, they've sent out 30-odd thousand warning letters around this. They've sent out about 1,500 these letters they say intent to disclose, and they've only disclosed about 50 that so far we understand. But there's, these are things that if you're dealing with people and they've got these, they need to engage with the ATO immediately, because this stuff is happening and moving very quickly. Timeframes are very strict and very short. And if they don't do something about that, then the consequences can be really significant. You can have a situation where, you know, the director suddenly has given a mortgage over their home to the ATO that they didn't intend to do, or they've, you know, been reported to a credit reporting bureau, and that's going to make it much more difficult for you guys to get funding for them.
We just got a question. So what do you charge, or how is your fee calculated? And also, have you contacted our group to speak at one of our PD days? In regard to the PD day, I'm sure Belle and I can take that offline, and if they contact us, we can get them in contact with you. But if you want to chat the first point, that'll be great.
Before we do PD days, Richard, we'll actually have Michael and Terry joining us in WA for October. So you might
You're going to get us live
first.
Yes. First in, best dressed.
So we've already studied.
Yeah. Even though you've come to this, you know, when we've got I think we're going to have 2 or 4 sessions running on the 4th and 5th of October. They've booked their flights. Belle and I have done nothing so far. Make sure you come along. We'll get some invites out, and once we pick the dates, it'll be somewhere, you know, so it'll be intimate so that you can actually feel comfortable talking to the guys. So I know you've done this, but also face to face is a little bit different, and there's totally, you know, a different interaction. So don't feel that just because you've done this that you're going to do, it's going to be repetitive. You get to see the lovely Belle and I and Michael and Terry. So don't not come, and you know we might even buy you a cup of coffee if you're lucky.
Just mindful of time, Michael.
Let me answer the question around fees. Because it's really important. The first port of call is this: is that for every client that comes through a referral partner like yourselves, we do a full review of the client and work out exactly where they're at with the ATO, because often they're not really fully aware of it. We provide some recommendations as to what we think we can do to improve their situation, and we give a fixed cost around all of that. We do all of that at no charge because we don't want to have any impediment for you to actually send a client to us just to have a look and have a chat and see whether we can help them. If we can't help them, we'll tell them, you know, their situation's as it is. But, you know, that happens rarely. Generally, we can improve the situation. So, yeah, and so in terms of that, it's a fixed fee. We agree that fee up front. If the client says, yes, we're happy to proceed, then that's when they pay the fee. But prior to that, it costs them nothing. And that fee can be anywhere from, you know, if you've got a client, we've got a client that's got, you know, maybe $100,000 in debt, then that fee might be a couple of $1,000s. The other thing we would also do is I mentioned before, there's broadly two components. We get them under control, fix the debt, and if, you know, give time to allow the transaction to take place, put in place a long-term arrangement if there's going to be some debt left there. The second part was around the reduction of the interest and penalties. We do that purely on a success basis. If we get nothing back, they don't pay us anything. Otherwise, they pay a percentage of what we get back. And yeah, so because we've taken a decision as a business, the first part we can absolutely guarantee. The second part's wholly discretionary and getting tougher at the moment. The ATO aren't, you know, they've given everybody a interest-free holiday, and they're not as generous around that as at the moment. So we've taken a view as a business that unless we get an outcome on that, we charge them nothing.
Guys, if you don't feel comfortable, just please feel free to reach out to Belle and I, and we're happy to cascade it to Michael for you as well.
Yeah, I think that's a really good point, Carla. The other thing too is that, you know, we're a bit weird. We love talking about tax debt here. So if you just want to ring up and ask some questions, you know, either myself or one of the team will absolutely have a chat to you. And it's a bit like, I know you guys do it a lot, where they say, just ring up and talk through a scenario. Then just ring us and talk to us and say, look, I've got this client. This is where we're at. What do you think we should do here? Is it something that, you know, maybe you can add some value? And if we can, we'll say yes and explain how. And if we can't, we'll tell you, no, I don't think you need us, but go down this route. And the other thing too is that people often ask, how do you go with dealing with their accountants? The answer is really well. We're not an accounting firm. We're not a threat to most accountants. And to be honest, most accountants, when they find out about us and haven't dealt with us before, we fix the one that we're dealing with, and then they say, here's 5 more that we'd like your help with. So we've got really good relationships there. And, you know, we're obviously well versed in how to deal with that.
I think building referral partners is certainly something that is important to your business. Looking at today's world and where it's heading with direction, you know, consolidation, we've talked about tax debt and everything like that. Creating that relationship with a referral partner will certainly help get those extra deals over the line. But yes, we do have the 2 sessions coming up in Perth for October, so we will have to get our invites out for that one. I do remember.
If any of you on here would like to come along, let us know. And what we can do is put you guys, once we do the invites, we'll make sure that you get first pick, because I know that it's going to be pretty limited. And I think from memory, we're going to be running 2 sessions on each day, but we don't know, you know, one's going to be north, one's going to be south, but we're more than happy to, you know, anyone who's done this, you know, put you guys your name first so that, you know, you get to pick before we run out of seats.
I think
Michael and Terry will have to stay a whole week.
The other thing too, Belle, sorry to interrupt you, is that they are, because we do quite a lot of these, and they are very different. It's a bit difficult in this sort of forum, and we did this just because we felt timing-wise we couldn't get over there until October, and this is really important and topical at the moment. But they are a very different session because it gives us an opportunity to, we do them in small groups, to throw actual scenarios around and talk about them, and it's not me, you know, the 3 of us talking at you. It's more of a discussion workshop type environment that, you know, we can get some real value out of.
Perfect. Might be able to do some live case studies on the day, Michael.
Yes, 100%. 100%.
Awesome. All right,
we've got a million of them.
We might end today's session at that. So hopefully you're already thinking of a deal for Carla and I. We're very keen to get one on the board. And obviously we can help work with Michael and his team as well to get that solution for your customer. So thanks again for attending. Thanks, Michael, for joining.
Pleasure. Thanks for having me.
Great. Terry certainly missed out.
Yes, and look, apologies. Terry's was going to join me today, but he'll send you in first. But we think it's not COVID, but he's woken up feeling very ordinary today. So apologies on his behalf.
Thank you, Michael. And you have a great trip because you're going away. So enjoy yourself.
Thank you so much. Yeah.
Don't think of us. Yeah. Forget about it. See you guys. Thank you very much.
Thanks, everyone.
Thank you.